Good morning, my name is Christelle from France de Klerk Independent Technical Analysts. Kevin wanted us to look at gold. And every week we discuss a moving average, especially on the weekly graphs. We look at the 40-week moving average, which highlights the long-term sentiment and the trend towards that share. But this week I want to include the detrended price oscillator as well, an indicator that is used to identify the cycle of the share. In other words, are we in an uptrend or are we approaching and have confirmed the downtrend? And the reason why I wanted to highlight this indicator is because it once again emphasizes the importance of that moving average. And sometimes it feels like a repetitive tape that we keep on talking about the moving average, the 40-week moving average. But this detrended price oscillator, which is not to identify momentum, it's purely to identify the cycle, confirms once again the importance of that moving average. And the way the detrended price oscillator is constructed is basically the difference. It measures the difference between a past price and the moving average. And remember, the moving average and the simple moving, and remember there's different types of moving averages, but the simple moving average we use every week, the SMA, is basically on a weekly graph. If we look at the 40-week moving average, it's the average price of the last Friday's closing prices. Because on a weekly graph, that candle represents the moving price of the week, and the moving average is constructed, is calculated by the closing price on a Friday. All right, so I'm going to use the detrended price oscillator, and Kevin, we're going to look at the gold graph because a lot of investors are keen, and as per your email, very keen to make use of the oversold situation on the gold shares on our markets. So at the moment, we can see I've got an inverse cup and handle formation on my gold graph, which is a negative formation, because once that supports, that waits at $1,678, once that level starts to change into a resistance, the warning and the negativity around that inverse cup and handle will be confirmed. We are already below the 40-week moving average, which highlights a warning. We have already found resistance at a level that is lower than previous resistances, which tells me lower highs, which is negative. So let's go back to that detrended price oscillator to say, hey, when was gold in an uptrend and when did it start to confirm, hey, this uptrend has come to an end. It is now moving into a downtrend negative cycle. And I want to go back, and every time that 40-week moving average, and remember that is the red line on my price graph, every time it changed into a support, within a week or two, that detrended price oscillator moved upwards, came back, kept that zero line, and remember, the trended price oscillator goes from a minus 200 up until a positive, 400 or 500, depending on how high the cycle goes. But the zero line, that dotted line, that is the line in the sand. Above it, it confirms the uptrend, the up cycle. Below it, the warning is on the table that the trend is turning around. Again, the gold price came back, kept the moving average as support. Beautiful, tick. But it also kept my zero line on the detrended price oscillator as support. Rose upwards, pulled back, same story on my DPO, that's the abbreviation for detrended price oscillator, pulled back, found support. But look, within a couple of weeks, that zero line on my DPO was tested, remained a support, and bounced again. And now what has happened here since that week of the 10th of May and the 14th of June? Exactly the loss of an upward cycle on my DPO was also visible on my 40-week moving average. We could see, 1, 2, 3, for 5 weeks, it tried to keep that 40-week moving average as support, but it couldn't. So, as technical analysts, there's no point in using two indicators that basically tells you the same story. So for now, I want to, almost minimize, and I just wanted to put the words out there so that my pronunciation doesn't distort the trended price oscillator wording, so that everybody knows what I'm talking about. But for the moment, it just highlights again that 40-week moving average, and the fact that the gold price is below it is a warning. Because I know, look there, my down cycle on gold has also been confirmed by my DPO. So now the question is, only when my 40-week moving average, only when that zero line on my DPO starts to change into a support again, in other words, the gold price needs to start to trade above it, and that is waiting at $1,827. Only then can our gold investors take a sigh of relief and say, hey, the cycle is turning around, maybe we can see some upside, and maybe the gold price can go back to that high of $1,916. Every week we use the stochastic to identify overbought or oversold levels. It helps us, it gives us a little bit of a timing of when we can enter in. And for many of you who follow us every week know that we wait for that positive divergence. We wait for that negative divergence before we take action. But the DPO, along with my moving average at the moment, tells me that only above $1,827 will the expectation be there that my gold price can rise again. And that low, Kevin, at $1,678 has to remain a support in order to maybe see a possible bounce in the gold price. But because below that level, that inverse cup and handle can take my gold price a lot lower. Schwab wanted us to look at Montauk, ticker MKR on our exchange. At the moment, I mean, it is so, the share is so newly listed. I barely have a stochastic indicator. I mean, I don't have even enough data there, even for a DPO. You can see, obviously, it's oversold at the moment because of, the downward trend. So the first, if you don't have anything on your indicator, Schwab, the first thing you can go to is your candles, the price action, to see what does the investors think about the share. Are they positive or are they negative? But we can see this week that the share has found support. The low of around 100 Rand was tested, remained a support, and the share is at the moment, yesterday closed at around 109 Rand 97. So as technical analysts, we sometimes wait to see, is there enough buyers to lift the share price through a resistance? So sometimes we wait for confirmation of enough optimism before we act, which by common sense does not make any sense at all. You would say, Chriselle, why do you want to buy a price at a higher level when you can get it lower? Remember, no matter how profitable a company is on paper, if there is not enough buyers, if there's not enough push to the upside, that share price won't rise. So your first confirmation, Schwab, on Montauk would be above 124 Rand 50. And remember, these are weekly graphs, so by the textbook, the share needs to close above that level on a Friday, meaning you'll make your decision on the Monday to say, hey, I'm going to top up or I am going to enter this position. The low of the share is 100 Rand, as I've said. You can use that as a protection level, or use your average true range indicator to say, is that enough breathing space for my share to make sure that the stop loss you have is at least 100 Rand or even bigger than that. Yes, of course, there's some upside, but at the moment, I would wait for that confirmation of optimism to say, this share is turning around. I'm not trying to catch a falling knife, and that would be above 124 Rand 50. Kern wanted us to look at Telkom. And he had quite a descriptive Twitter feed saying, Christelle, I want to buy it, but the daily looks different than the weekly. And great, Kern, that makes it so much easier to analyze. So let's look at the moment and the upward cycle. My DPO indicator clearly shows the support on that zero line. And I can see that on my 40-week moving average. The up cycle on the weekly graph on Telkom is clearly in place. My stochastic is saying not the ideal place to buy at the moment, but if I look at the patterns, if I look at the behavior of Telkom since that period, March, April last year, when it continued to find support, consolidated sideways, what did it do? It bounced, pulled back, bounced, pulled back, and every time the pullback was a little bit higher, a little bit higher. And that is a beautiful confirmation of optimism, of lower highs. It tells us that every time the share pulls back, there is enough buyers to say, hey, you're not going as low as you were before. We are protecting you for upside. So now and if I read your tweet correctly, you are a short-term trader. So that means you want to get your timing right on the daily graph. So at the moment, Kern, your stochastic is oversold. It's sitting on a 28. Your blue line, the K line within your stochastic, has broken upwards. And I should maybe zoom that in for you so you can see that a little bit better. So there is still a lot of room for upside. And this is the ideal place to enter into a position. Your DPO has changed that zero line into support. That tells you that the uptrend has been confirmed and is in play. In this case, the 40-week is still there. So I have to change this to a 50-day moving average because that is the confirmation for medium-term investors. And since that day of the 22nd of June, this year consolidated sideways. It stopped making new lows, new recent lows, and that is seen as positive. It tells you every day there were enough buyers to protect it. Yesterday it was up 2.59%. So technically, with that stochastic being low, your DPO is confirmed, your 50-day moving average almost came close to test it. That would be a buy opportunity. Stop loss I would use is that 50-day moving average, 43.44, and obviously that strong resistance is waiting at 50 Rand 22 for a possible target that you can aim for Telkom. And obviously levels that you can use in the meanwhile to say, first level that needs to remain a support, 46.27, 47.01, 47.74, 48.80, and then as I said, that level of 50.22. Beautiful graph. I think it's a buying opportunity, but stick to your stop loss level, 43.44, to protect capital.